Good morning, everybody, and welcome to this specialist lending webinar. I'm Dan Morris, Key Account Director at Crystal Specialist Finance, and today I am joined by Phil Quinn, Head of National Accounts at Together. Good morning, Phil. How are you?
Hi, Dan. Yeah, good, thanks. And good morning, everyone. Thank you for joining today's session.
Brilliant. Good. Right. So in today's session, in terms of what we're looking at, so predominantly we'll be looking at where to go when the high street says no. So we'll be looking at those, I suppose, off high street solutions for your clients, because I think it's fair to say that a lot more of your clients that you're getting through your doors or repeat business don't fit the high street anymore. And there's always a story to, I suppose, to tell around that. It could be the adverse credit piece, the unusual property types, income. There's always a story behind it. I mean, would you agree with that, Phil?
Yeah, I think when you're looking at the type of demographic of clients that we see today compared to 10 years ago, there's a vast change in circumstances. We know that credit issues are on the rise. Income and affordability constantly changes, types of employment, different variations of income and how lenders calculate that. And then, of course, you've got the more specialist side of lending generally with complex buy-to-lets, unusual property types, bridging and commercial. So now more than ever is specialist lending so important to the market, and to be able to help advisors help a customer goes a really long way in order to build up your credibility as an advisor, and also to build up your customer profile for your customer bank for the future. So yeah, absolutely critical now to the market.
Yeah, definitely. And I mean, looking over the past 12 months, in terms of coming out the back end of COVID, lenders are still restricted in terms of the clients that they want on their books, especially the high street, because if you're not a very vanilla client, the LTVs that they want, then ultimately you won't be able to find a home for them on the high street. And that's where we look at these specialist lenders, the lenders that use a common sense approach, I think it's fair to say. So that's the main part of this session. We're going to start off the session with our thoughts on the stamp duty deadline, what we believe is going to happen. Now, I'll stress that these are my thoughts and Phil's thoughts. It's nothing to do with Together or Crystal. We'll look at solutions to beating the deadline. So if your clients are adamant they want to beat it, and it looks like their mortgage lender potentially may not, we'll look at solutions for that. And then I'll give you a bit of a background around Crystal in terms of what business we're seeing more of. And then that fits in nicely with Together and what sort of business they, I suppose, specialize in and their sweet spot, really. But get out of this session what you want to get out of it. So this is a live session. If you can see on your screens that you've actually got a Q&A box. So if you do have any questions throughout this webinar, then please do ask them, and we'll look to answer every single question live if possible. If not, we may need to get back to you if it's more complex or if it's about a certain case as such. But please do make this as interactive as possible. We've also got a special guest, which is a Primis broker. I won't go into too much detail, but I suppose an insight in terms of the process and how they found it. So yeah, hopefully you find this a useful session. So, right, Phil, $1 million question. What do you think is going to happen with the stamp duty deadline?
Yeah, well, it really is the $1 million question, isn't it, Dan? Because if we take a look at the market generally, we know that, of course, the last 12 months have been incredibly challenging, goes without saying, due to the pandemic, and there's a lot of pressure building on the housing market and actually on the economy itself. Now, there's two ways to look at it, really. One is the stamp duty funds that are generated for the government are sky high, so no doubt that they want to eradicate that tax relief as soon as possible and get it back in the market. However, if you take a more broader approach to stamp duty, by having that saving in the first place, there's an argument to say it will generate more tax through many other sources. So you take into account your customer who is buying a property. Well, they need a removal van. They then buy a new kitchen or a new bathroom, and you've just got this whole constant domino effect of 5, 10, 15 companies that they're bringing into the purchase. And then when you take into account all the tax that's generated from that, you could say there's an argument versus having stamp duty or not. In the last week, we've seen a lot of pressure building for the Chancellor, and there's talk of a 6-week extension. I think it will happen. That's just a personal gut feeling, because usually when you have that amount of pressure and you have the associations and all of the associations in the mortgage market putting that pressure onto the government, you quite often see a change that will come with it. That's just a personal view. However, what we have to think about is what are the pros and cons of the extension? Well, firstly, the obvious pro, of course, is for the individual buyer who is buying. They're going to be able to save on the stamp duty. But we are going to talk about solutions, whether it's extended or not, because if it gets extended, a lot of people will get their property purchases through, but then we'll be back to the same position in 6 weeks' time from now, because more and more people will then try and buy, and you're back into that position we're in today. So all you're doing is you're just kicking the can down the road, so to speak. The cons of it, generally speaking, are property prices slightly inflated because of the stamp duty saving. So that's an argument which many will look at. And of course, you then have the pressure on solicitors and conveyancers that they simply can't cope with demand. So we'll talk about solutions to that shortly. But in summary, obviously it's fantastic for the individual. If it was here forever, great. That's not realistic. I think it will be extended by 6 weeks. Whatever happens, whether it does or doesn't, you'll always need other alternative ways of finding finance for your customers. Because like I say, it's just kicking the can down the road for the inevitable, where it will come to an end at some point. Yeah.
No, that's it. And you know, I'm of a different opinion to you, so it's kind of, I suppose, playing devil's advocate really. But I think, in my opinion, that it's not going to be extended, and certainly if it is, it'll be on, I suppose, properties that they've already exchanged contracts on. So any new applications, I don't think will be allowed, because, in my opinion, one, look at the property market; it's booming at the moment. They're saying the figures in terms of transaction levels are at an all-time high since what? The beginning of the first crash back in 2007, 2008. So I think we've generated enough help within our industry to get it going. I also think as well, because of the fact that we are in the midst of a pandemic, that if he does extend it, what sort of message does that send to people in terms of, right, go out, start mixing again, go over people's houses, touch stuff, catch COVID, all that sort of stuff. I don't think it'd happen, or certainly for no new transactions. How you will police that, I have absolutely no idea. But for me, I think it's, don't look at the if it gets extended, look at the fact that this is the deadline. It's set out end of March, and we need to start planning for that. If it does get extended, then happy days. Do you know what? As you mentioned, you are kicking the can down the road. But in terms of some facts and figures, if you had a client who put an offer in and started the mortgage process November, December time last year, you had I believe it was an 80% chance of completing before the end of March. If you fast forward to an application that went in for January, February, in a standard year, you had a 60% chance of completing before the end of March. Bring COVID in the mix, bring lenders' SLAs, let's be honest, most lenders' SLAs at the moment are a lot longer than they were in normal years as such. Third parties working from home, you've obviously got the challenges of not being in the office. I think if you're anticipating that all your transactions from January, February time will complete, then I really don't think that you understand the market that we're in, really. So I think if people do want the transactions to complete before the end of March, we do need to start looking at solutions. And as you're probably all aware now, that what I'm going to say is realistically the only solution to guarantee your mortgage is going to, or your property purchase is going to go through in time, is looking at bridging finance. It might not be feasible for a lot of your clients in terms of the actual equity or cash they've got available for the purchase. But if you've got a client who does have, I suppose, the potential to look at bridging finance, then I think it is something that you do need to explore. Because if you're not actually offering that solution for your clients, which we do on every single phone call we have with our brokers, saying, right, set expectations that you've got this mortgage going through currently, the chances of it completing before the end of March is, well, who knows? However, have you thought about bridging finance? If it's not a solution that you're not potentially offering your clients, then you could be doing them an injustice. I mean, I don't know what your thoughts are on that, Phil, but I think every person now, certainly with new applications, they do need to be looking at an ulterior solution and a standard residential mortgage to get this through before the end of March.
Yeah, I agree. And actually looking at keeping an eye on the mortgage press in the industry, there's a few lenders now who aren't accepting applications if they're needing the deadline by end of March, because it's not necessarily feasible for them. It is the perfect solution to help the customer, as you say, Dan. If that customer has the cash to make up the rest of it to the bridge, it's the perfect solution. I've got a friend who lives around the corner, and he's in the process of buying a property, and he said to me, "I'm on edge at the moment." So I said, "Right, have you heard of bridging finance, or do you know what a bridging loan is?" And as expected, he had no idea where to start. And that's fair enough, because we are the professionals. You and I are the professionals. What we need to do is we need to talk to our customers about it, so that they can understand there is a solution. Now, if your customer is due to save £3,000, £5,000, £10,000 in stamp duty, would they rather make that saving and pay a few £1,000s in bridging interest and remortgage away post deadline, or would they want to either pay the funds or potentially lose the property? So it's the perfect solution. Of course, bridging is used for various reasons, which we'll touch on. But at the moment, the number one go-to reason for bridging is getting your customers over that deadline before it's too late and before it will cost them a fortune on the stamp duty. Yeah,
no, exactly that. And I agree with that. And I think we did a survey probably about 18 months ago now, and only 15% of the people that answered the survey actually understood bridging and actually did bridging and was proactive around the bridging finance market. So what I will say is, if there's anyone on this webinar which has potentially thought about it or even turned bridging finance away for this solution, you can always refer business to us, because again, we're the experts. You're part of Primis, so you do have that referral piece to ourselves, or we can actually take over the client and the advice and do the bridging finance. So if it's a solution that I suppose you've thought about, but you don't even know where to start with it, then just pick up the phone, drop us an email, and we can kind of hold your hand through the process and then look at the pros and cons and the costings as to, right, doing this purchase or this transaction on bridging finance, beating the deadline, and then mortgaging away from it, as Phil said, down the line, and just see if that, I suppose, the bridging finance costs actually outweighs the stamp duty costs. Because again, we don't know what's going to happen to the deadline. So I mean, we'll come back on to bridging finance in more detail in a minute, but just think about alternative solutions for your client. Should you have to look at that. Right, have you got some questions in? We do. Right, okay, questions coming in. Phil, I've been asked, just quickly, can you explain your property criteria and the sorts of properties that you lend on?
Yeah, absolutely. So firstly, our lending is right across the board in terms of products we offer. So we do residential, second charge, bridging, commercial, buy-to-let, and even auction finance and development finance. So we cover the whole suite of products, which are all accessible through Crystal. We'll talk about our relationship between Together and Crystal and why we're so efficient with what we do in helping you and your customer. We'll come to that shortly. But to answer your question, so our property criteria and property types is across all of our lending streams. And the simplest way I can explain it is, if the property has a title, nor can you pray in it or teach in it, we're likely to lend on it.
I love that.
So should send that into catchphrase, that one. But it's an honest assessment of the way we look at properties. We're so flexible with what we do that it'd be rare for us to decline an application based on property. Now, our security, of course, is the property and is the loan to value. So we're not going to be doing north of 75%. If it's a particularly unusual or a property that is quite run down, that might be reduced to 65%. So for us, the LTV is crucial to it. But whether it be flats over business, whether it be a high rise, whether it be freehold blocks, it could be an office block. In normal times, we could be looking at restaurants and pubs. We do lending on nursing homes and warehouses. It's so varied with what we do. Auction finance is a big one at the moment. Obviously, landlords wanting to snap up properties on the cheap. And what you tend to find is with properties of that nature is quite often they need work doing to them. So if the surveyor has said, not happy with X, Y, and Z, or if the property has multiple kitchens or bathrooms, or has neither for that matter, we can consider the lending. So the key message really to leave you with on property is anything at all that you have in front of you that your customer is looking to purchase or refinance is under consideration from our point of view.
Brilliant. No, that's perfect. That's perfect. And I suppose we're seeing a lot of that as well, to be fair. So ultimately, I suppose I want to address the elephant in the room straight away, because a lot of people see Together as a lender of last resort, right? There's no doubt about that. A lot of people see you guys as lender of last resort. You've been known previously for having horrendous rates, and people only coming to you, or potentially not even coming to you because they've got nowhere else to go. I kind of want to squash that. So you guys are a fantastic lender, all right? And the products that people may have seen previously, say 7, 8, 9%, yeah, they were available. But if you look at products now, which we'll come on to in a second, you've got rates that start with a 4, which I think for being in the specialist market, being and having the sweet spot that you guys have in terms of property, adverse, income, all that sort of stuff, I do think you do have some fantastic products. Now, the whole point of this webinar is the fact of looking where to go when the high street says no, and you guys are a prime example. So what we're seeing more of as a business in terms of Crystal is we're seeing the adverse credit piece. So I think, adverse credit, it's trendy these days. Everyone seems to be getting it. If you've took yourself on a mortgage payment holiday but actually haven't told your lender, or beginning of lockdown, the first time round you might have missed a credit card, or been late, or have had something on the unsecured basis where, do you know what, people were hit hard, and people are going to get more and more adverse credit. But it's where you guys fit in and where we can help. So if you've got a client with adverse credit, then it's worth speaking to ourselves and to Together. So I suppose that comes on nicely to, I suppose, the next point. But can you tell us a little bit more around Together's, I suppose, credit policy and what you'll allow in terms of allowable adverse credit?
Yeah, thanks, Dan. I think generally speaking in the market, first of all, we know over the last few years, CCJs and defaults have been on the rise. So this is pre-pandemic. So that is something that is happening, something to be aware of. There are solutions, Together being, of course, one of them. Since the pandemic, there is a question mark at the moment about payment holidays. So how are lenders actually going to record payment holidays on credit profiles? FCA don't want them to be recorded, of course, but we don't know what's going to happen. So, and then in addition to that, you've had unemployment rising and rising. So no doubt that's going to affect people when it comes to their credit obligations. So it's another element of as to why specialist lending is growing, and as to why to become more familiar with it and pick up the phone to Crystal for these type of cases. So for us, we are as lenient as we can be and as fair as we can be, but there is the odd restriction when it comes to adverse. Generally speaking, anything that's over 12 months ago will be ignored. Anything within 12 months, it depends on the amount and whether it's satisfied or not, and there may be a loading on the rates. What we're not too comfortable with is unsecured arrears in the last 6 months. And because that's demonstrating to us already that the applicant can't keep up with smaller, simpler methods of finance than mortgage lending. Where we stand out in the market is very much on payday loans. So we will. Sorry,
I was about to ask that, yeah, because someone's just asked about payday loans. So yeah, no, brilliant. Go on.
Oh, okay. So payday loans for ourselves, we will allow one current payday loan. But it does have to be redeemed on completion, either by the client or via our funds. And we'll allow up to 3 satisfied payday loans in the last 12 months. Now, that's not going to be an absolute given on every case. We're going to have to understand why they've taken a payday loan. If it's related to furlough, it may be more of a challenge. So it's going to be case by case. But in summary, very, very flexible adverse policy. Underwriters are happy to assess different types of adverse, pick up the phone to Crystal and see what we can do for you.
Yeah, no, brilliant. That's perfect, and hopefully that that covers off that question. So thank you very much for that. But yeah, again, in the specialist lending world and the likes of Together and all of the other, I suppose, challenger banks and such, just tell us a story. If you can tell a story and you're comfortable and you would lend your own money to that client, chances are, subject to LTV, there is going to be a product out there, and the likes of Together can support you alongside ourselves. And even if you have got the high street, this isn't your standard bread and butter deal that you would normally get in, because you deal with your vanilla resi and buy-to-let. Again, just refer and earn to ourselves. So if it's not something that you want to get involved in because ultimately you're too busy doing the stuff that doesn't cause you a headache or isn't complex, or actually you're not banging your head against the wall trying to source a product that may not exist and try and find that unicorn, literally just refer us that deal. Say, Dan, I've got this client. This is the credit file. This is what you want to do. Can you help? We'll come back to you. That's it, and say, right, yes, we can provide a solution. This is what it looks like. Or actually, do you know what? That product doesn't exist for that client at this time. It may do in 3 months' time when they've come out of the 12-month period, or they've had no adverse or defaults in the past 6 months, or whatever that may be. So at least we can set your expectations and ultimately set your clients' expectations and not waste your time, because a lot of you are going to be self-employed and your time's money. And again, if you're trying to source something and wasting hours and hours, it's not a good use of your time. Yeah. So work smarter, not harder. Refer the business into us, because again, you can only come to us and certain lenders, go to certain lenders via ourselves. Then it's kind of a win-win for you. You prioritize, you send off the unusual cases like the adverse, the unusual property types, the bridging, the development, the commercial, the semi-commercial, whatever that may be. And we can help you facilitate that lending and essentially source products for that client, which you may not have A, been able to go to before, or B, just had time to do. Because if you're using these sourcing systems, you'll put in that there's it's timber frame, adverse credit, Japanese knotweed, whatever they may be. But a lot of these sourcing systems, they don't use an and, it's or. So they'll look at whether it is timber frame or adverse credit. They don't look at combining them all together. And that's where the human approach and the human underwriting needs to come in. So sometimes you'll be looking on these sourcing systems and nothing's going to show up. But actually, if you sent the deal to us, it could be an exclusive that we've got as Crystal, or actually just something that it hasn't found on that sourcing system. So again, it's always good to speak to us and our underwriters to see if these products are available.
Yeah, Phil, just to echo that point, Dan, about referring into you, it's part of the tool. It's part of your toolkit. So taking into account, you've got your high street customers, you're doing GI protection, you've got your compliance to do, busy individuals. You've got a solution of these complex cases. Just refer them over. You'll look after your customer. You'll get your slice of the proc fee, of course,
exactly that.
Fix it off.
Do you know what? Sorry, just to jump in there. But on the back of the proc fees, the more specialist it is, the more work that needs doing, the more you're going to earn. So if you're sticking to the high street, you're going to earn point something. If you dip your toe in the specialist market and go away from the high street, go down these side streets, these boutique shops, these boutique lenders, the common sense lenders, you're going to earn a lot more money. There's no two ways about it. Not saying your clients are going to get ripped off or anything like that, but ultimately, procs are better or bigger as such when you do go off the high street. And the amount of brokers that have came to us recently where they've never gone off the high street, they've dipped the toes, they've done deals with the likes of, say, Pepper, Together, Massive, and all these sorts of guys. They've got paid, say 1% for that deal. Now, that is a pretty decent proc, especially if you're referring a case to us. So you drop me an email, for example, it's not predominantly to do with this, but I had one of my brokers who emailed me saying, right, I've got a commercial transaction. I've never done commercial before. It's not within my sweet spot. This is what it is. It's a £6 million purchase. They're looking at 60% LTV. It's for a catering business to purchase a unit. Said, can you guys place it? We placed it. We dealt with the inquiry from inquiry right way through to completion. So the broker didn't get involved. Yeah, we gave them an update, but they cracked on with their bread and butter stuff. And on the back of that, that broker got paid, it was £45,000 for that email. So a really, really good proc. I'm not saying you're going to get paid 45 grand for every email you send me, because you're not. But if you're getting something through, like I mentioned, literally drop me an email and my guys can take over it and keep you in the loop. But ultimately, you can refer business onto us, and that's business that you predominantly wouldn't have dealt with before. Phil, another questions came in for you. I know the answer, but I'll let you field it. What is your max LTV? So I suppose if you can cover off your max LTVs across the board for all of your business sectors, please.
Yeah. It changes depending on the products, but for first charge residential, 70%, and we've just lowered the rates down to 499, and they're due to lower again. If we're looking at second charge and consumer buy-to-let, it's also 70%, as well as regulated bridging. On unregulated products, we can go up to 75% for bridging and buy-to-let, and we'd be looking at up to 65% on commercial. Now, on the buy-to-let at the moment, we have got an exclusive product with Crystal, which is priced at 4.99, and that is one of the lowest ever buy-to-let products Together has had. So delighted to be able to partner with Crystal on that. And I'll talk to you a bit more as to what we do on buy-to-let, and why we're so diverse and flexible in the criteria. I'll talk to you about that shortly.
Yeah. Do you know what? Just coming on to that exclusive buy-to-let product. So we're I suppose big advocates of that. One, because it's a 4.99 rate, and two, because that fits so many clients. So we're seeing a lot of first-time buyers, first-time landlords, where it could be kids getting money off mum and dad, don't want to move out, but actually want to purchase a first property. And we're using that product for that, which, other than that product, there's not really many available in the market, and certainly not priced like that, and don't have the product features, because it does have a lot of really good product features. We're also seeing a lot of expats that are wanting to purchase back in the UK, which again we're facilitating through yourselves. They don't have any credit in the UK, currently don't own a residential property, but because exchange rates are down and have been for quite some time, we've seen a big uplift in terms of expats. And then, do you want to touch on as well quickly in terms of, can you guys offer buy-to-lets for foreign nationals with no experience?
Yeah, so it's right across the board in terms of the flexibility. So that would include foreign national and expat, first-time landlord as well. When we're looking at the entity types, it can be limited company, it can be LLP or individual, and then we will look at different types of property. So it could be student let, it could be holiday let, it could be HMOs, it could be semi-commercial with your flats over your business. So it's incredibly flexible on the buy-to-let. Stress rates start at 125, working upwards if it's individual, but taking into account the product, the stress calculation, and how flexible it is in terms of the applicant demographic. And remember, we've still got the property flexibility, we've still got the adverse flexibility. So we're covering an awful lot in terms of the buy-to-let, the specialist buy-to-let market there.
Yeah, no, exactly that. And there's a lot of people that are part of Primis that do want to use the likes of Gatehouse Bank, because they have a product which is relatively similar to what you guys are offering for the expats and foreign nationals. Now, as you know, in terms of off-panel requests, there needs to be justification for it. But since people have been using your product rather than the Gatehouse product, they found it far better, but more importantly, quicker to do the transaction. So you guys are quick in terms of your transaction times. You're not taking months and months and months. And again, because we understand your process and your underwriting requirements and, I suppose, shopping list, then we complete, I dare say, quicker than most other brokers and packages that you do. Yeah,
you're right, Dan. And the two key things that stand out for me, for ourselves as a lender, is speed and flexibility. They're two essential elements to the success of what we do. Whether it be buy-to-let, whether it be residential. But going back to the bridging for a minute, especially with these times, with the stamp duty deadline or another type of case, you know, you've got an investor who's trying to snap up an auction property, whatever it might look like, or a chain break. You've got to have a lender that will A, be efficient, B, be flexible with the criteria, because more often than not, it's not a vanilla case, and C, have the speed, the expertise, and the confidence that the funding will be there. So we've had cases, bridging cases, complete in a matter of days. I've seen a couple complete in hours, but of course that will be by the exception. But days and weeks is very much the norm for us when it comes to bridging, and taking into account the other streams of lending that we have, as mentioned before, the commercial, the second charge lending. It's all under the same banner of what we are best known for: the speed and the flexibility.
Yeah, no, exactly that, mate. And there's some great points in there. I'm just having a look at the questions now. We've got another one, which I suppose it isn't a question, it's more of a statement or a comment, really. So I'm just doing a bridging loan. I got a slightly better rate going through the packager company than direct to the lender. And I also have the support from Crystal. Now, I just want to touch on that because it's quite a good point, really, because what I will say about Crystal, certainly on the non-reg side of stuff for bridging, and potentially on the regulated bridging pieces, we will not be beaten on price. So by that I mean, go to any lender in the market, go get a bridging loan from them, come to me. As long as you've got legitimate terms, then we'll always beat the quote that you've got. All right. So if you say, you send me some terms and say, right, Dan, I've got this rate, can you beat it in terms of shaving a bit off the rate? Or actually, I'm happy with the rate, but can you pay me a little bit more than what I'm getting from this lender, or even packager, whoever? Or actually, I'm happy with all of that, but can you just reduce the fees for the client? Whatever it is, as long as I've got legitimate terms, and I'll stress legitimate because I've had lots of creative stuff sent to me, shall I say, we'll always beat the quote. And again, that's with our exclusives and relationships you've got with certain lenders. Like together, if you send us certain deals and we like the look of it, and together like the look of it, then potentially they'll be able to create a bespoke, not a bespoke product, but price match as such if they like the look of it. So you've got to remember these lenders, they're not rigid. It's not black and white. There is areas where ultimately they can say, right, I like the look of that deal. The risk element's fine. The client profile's fine. Adverse is fine. We want to do this. And they'll create, or they'll let it fit with inside their current, I suppose, products, really, which again, that's how our relationship works. So sometimes that something may not fit. It's worth speaking to us because we may be able to find that solution. And like I say, together, very flexible in terms of actually the common sense approach and the common sense lending piece.
Yeah.
Right. Okay. What else have we got question wise? Done that one. Right. Okay. So yeah, there's a few more coming in. Bill, just quickly. Well, I suppose not quickly. Another one that just came in. Could you tell us more a little bit about the process of buying a property from auction, how that works and what that looks like?
Yeah. So I touched on it earlier, but the reason a lot of people will come to us for auction finance, which typically would be a bridge, potentially a residential or a buy-to-let, depending on state of the property, but typically a bridge. It's back to that speed piece, and it's also back to that flexibility piece. With the properties generally being in a poorer condition, we'll need to be able to act quickly, and we'll need to be able to act with more of an open risk appetite, let's call it, than your average lender. So bear those 2 points in mind, which I've said a few times, but I can't stress them enough. It's that speed and it's that flexibility.
Right. Okay. Perfect. Brilliant. No, that's brilliant. So yeah, if you want anyone to elaborate on that, or if you've got any auction purchases, then again, speak to us on it. Right. So before we go, I suppose, any further in terms of our discussion, what I'd like to do now is introduce a special guest, which is a Primis broker, and he's both used our service over the past 12 months and done a lot of transactions with together, which previously it's a lender that he wouldn't have went near or even heard of, and has hadn't done much specialist lending prior to this. So yeah, hopefully the next is interesting for you and gives you a bit of an insight from a broker's point of view rather than mine and Phil's. Okay, so if we can watch that. Right, everybody. So today our special guest is Anthony McGoldrick from Mortgage Wise in Scotland. Just going to be asking him a few questions around, I suppose, his transactions and his relationship with Crystal, how he found Crystal, and then I suppose more importantly, how he's found working with both Crystal and Together, and the transition into, I suppose, the specialist lending market and how you found Together's service as well. Okay, so welcome, Anthony.
Thanks, mate. How you doing?
So I'm good, mate. How are you?
Yeah, good. I'm good.
Good stuff. Right. Okay. So just a couple of questions, as I mentioned earlier. I want your honest opinion, just because broker feedback is valuable, and there's lots of people on this webinar which are looking to get a bit of insight from one of Primis's greatest. Okay. So just first of all, tell me briefly a little bit about yourself and your business.
So, right. So, Anthony McGoldrick at Mortgage Wise Scotland, been part of the Primis network for 3 years now. 2 years we were part of another firm, and then myself and my business partner Paul branched off, and that's been just over 12 months now. Things are going well. We've been doing quite a bit of kind of specialist lending, dealing with quite a few investor clients. Our kind of tagline or slogan, if you like, for the website is "We solve complex mortgage puzzles." So we've been getting a lot of so we've been getting quite a lot of kind of quirky things in the door, which I quite enjoy. It keeps me on my toes and it keeps the job interesting. But it also means that I've had to like massively upskill in the last 12 months to come up with like alternative solutions for clients.
Yeah, definitely. Okay, perfect, brilliant. That's a good insight. So I suppose if it's nice, into the next question, why did you first start using Crystal?
Because we were using a different packaging company for the specialist stuff, who weren't great. And then obviously I had a nightmare case at the time. I bumped into you at the VOC down in Birmingham and ran it by you, and you're like, yeah, that's pretty straightforward. We'll do that. So obviously we got back up the road, spoke over the phone, sent you over the details, and yeah, it was very kind of straightforward. It was like night and day in terms of an experience. So that was kind of it from there on. Like every kind of specialist case that came across the desk, we sent to you guys. Also, like with obviously we get calls and emails all the time from other packaging companies asking us to use them, and every time that we get a case, I'll always send it to you guys, and I sometimes like ping it over to them as well, just out of curiosity. And the terms that come back are never as good as you guys. I would never go anywhere else now anyway, but I always just like to just keep a wee eye and just to see what other people are doing. But the terms from you guys are always significantly better than any of the other ones that we get offered.
You've never told me that before, so that's quite sneaky. Do you know what? I love it though. Yeah. I love it because one, it's good that you are seeing what the market. By the way, guys, this isn't scripted. I didn't actually know this. Genuine shock. It's good to see what the market are offering, and if we are still market leading, because as much as a lot of people may have the same people on panel, if you actually don't know the ins and outs of every single lender, which a lot of isn't physically possible, then you are going to miss tricks. So no, it's brilliant that you are still shopping around as such. And
well, do you know what? I mean, don't get me wrong. It's just like, see, like if I'll get like a phone call from like another packaging company, and I'll say, well, I've actually got a really good relationship with another company, and they'll say, well, like, you know, send us one as a trial, and I will, and they'll always go to you guys as well, but I will just kind of send it to them, because ultimately it's like I need to do right by my clients as well to make sure I'm covering all bases for them, and and like I've never had another company come back with better terms than what I've been offered by you guys.
Magic. All right, no, that is fantastic. I will feed that back to the rest of the team. What have you felt the benefits have been for using Crystal? So I'm not going to put words in your mouth. I was about to, but yeah, what have you found the benefits have been?
So the main benefit of using you guys is definitely the knowledge and experience of the team. It's really good. The guys really know their stuff, and if I've got something a bit unusual, like I'll phone and be like, right, this is the scenario, and we'll kind of chat through it, and like, well, and it's kind of like it's collaborative working rather than like me saying to the guy, this is what I need, or the guy's going to say, this is what you need to do. We kind of work together, which I really like. So we kind of work to get a solution that kind of works for the client, and it's we're kind of working together. It helps kind of upskill me, which helps then me upskill my team, because I'm developing my own knowledge. But also the rates and terms we get offered are always good, and just the speed as well. Like I think I said to you, Dan, last week I sent over an inquiry like first thing in the morning, and I had terms offered by lunchtime. Which again, and within that period, I had a conversation with an underwriter about the best way to structure it, which is just brilliant.
No, that's fantastic. And do you know what? In our industry, and certainly in what we do, service is key. We don't have the clients. Yeah, we get exclusives, but they're not our products. So if our service is terrible, then you're not going to come back to us. So no, that is fantastic. Right, so because this is, I suppose, a together webinar, it'd be, well, unfair not to mention them. So a lot of your business you've been sending us has been getting placed with Together. Now, the stigma out there that Together is a lender of last resort. But how have you found, one, their service when dealing with us and potentially dealing with them, but more to the point, how have you found their products in terms of their placement within the marketplace?
Yeah, I mean, I think, look, let's be realistic about it. Together, like in certain circumstances, they are the lender of last resort, because if you're looking at a standard residential mortgage, people don't want to pay, like 6 or 7%, right? But the reality is that some people, that is their only option. But Together money, when you're looking at something a bit more specialist or a bit trickier, or looking at kind of bridging or something like that, it is very, very competitive in terms of the pricing and the service. What I've found as well is that we've done a few deals with Together, and then I think we looked at a couple of we looked at a different lender for one of the deals, and it was just like a disaster. The lender said, "Oh, we'll do these terms," and it all looked great, and then we packaged it and we sent it across. They offered us these terms, thought, right, let's go with it. We sent it across, and then as we went through the process, they're asking for this, they're asking for that, the goalposts were being moved, and it was a bit of a nightmare. We ended up pulling the plug on the other lender and sending it Together anyway. So we just kind of at that point we're like, well, what's the point in going through all the rigmarole otherwise?
Yeah.
So I think as long as and I've heard that other people like kind of saying like, oh well, like they've maybe not had a great experience with Together, but to be honest, when I'm kind of asking them, like, well, I'm like, well, I never had any problems with them. Like, what was the issue? And it seems to, in my view, more the broker that's the issue rather than the lender. Do you know what I mean? Like, I'm kind of feel like they've maybe not sent across the information. Like, oh, why do you need to know this? Why do you need to know that? And I'm like, well, you should have that information on file anyway. Like, if it's like, it stuck to me like it was guys maybe I might be speaking out a term, but maybe hadn't done as an in-depth fact find as they maybe should have done, and then because the lender were asking what I would view as being kind of quite reasonable questions, they didn't have the answers, and that caused delays. Whereas I'll do quite a thorough fact find to my clients, so the lender comes back and asks any additional questions, I'll know the answer, and it's not a big drama and it's not a big delay.
Yeah, no, exactly that, and you're right there. I mean, I'm not going to wholly blame brokers, but if you're not going to that level of detail, or you don't understand certain lenders' policies, procedures, criteria, whatever you want to call it, then you are going to come into these issues really. And then there's no added benefit of using us, which are you very much aware of. But obviously you've been educated around the likes of Together's process and numerous other lenders in the specialist market. But more to the point, you've been educated, I dare say, using us in the whole specialist market. So when I spoke to you 12 months ago, I think it's fair to say that you were not unknowledgeable in the market, but you knew less. Certainly.
Oh, the limit. Yeah, I had a very limited amount of knowledge. I knew I had a base level of knowledge enough to have a very basic conversation. But any specific questions or any follow up questions from a client, I wouldn't have a clue where to go with it. Definitely.
Yeah, and that's another benefit of using us. It's the educational piece, which again, hence why everyone's on this webinar. Right, last question. If you could please describe Crystal in 3 words, and no swear words, please.
3 words, Crystal. Quick, easy, and thorough.
Okay. I like that. Do you know what? That kind of ties in with our core values. So you've got speed, quick, service, easy.
Yeah.
Flexibility for her. I'll take that. And it's
Yeah.
kind of what we're into. So no, that's brilliant. So that's all I need you for. So thank you very much for using Crystal, being an advocate, but more to the point, thank you very much for your business. All right, so you take care, mate, and I'll speak to you soon.
Okay.
Cheers. Bye.
Bye.
Right. So hopefully you found that useful, and I suppose the insight from an actual broker who previously we didn't have a relationship with. We met him at the Vox when we came on panel at the beginning of last year, and again our relationship's just gone strength to strength as it has with with the Primis network, really. But the important thing to get out of that and to get out of this whole webinar is just referring her. If you do have a client who doesn't fit Hyde Street and you're not exploring all of their options and looking at different avenues, whether it's going to lenders direct, I think it's always worthwhile coming to us for a quote, because as Anthony mentioned there, he goes to several different packages and we're always number one. But if you're just sourcing something yourself and you think, right, it fits with them, or actually there's no products available, I do think you're doing yourself and your clients an injustice. I mean, to give you an example in terms of our business, as opposed to the average broker, I think the average broker sits within their comfort zone and competes with usually 10 to 15 lenders per year as a maximum, because they know the criteria is inside out and they're happy, they like the BDMs and like the process. Anything other than this, they may not do or may not be aware of. To give you an example in terms of ourselves, we compete with between 40 and 60 different lenders every single month. So a hugely diverse number of lenders. But if the FCA looked at us in terms of treating the customers fairly, we absolutely are, because we don't have favourites. We are looking at the whole of the market, but we do a lot of business with together, because it's business that brokers like yourselves refer to us thinking this deal's dead, or actually on bridging, we've had this, can you get better? And it always goes to together, because they are a fantastic lender. They really, really are a fantastic lender. And they do some really, really amazing stuff. And I personally wouldn't have them on this call or on this webinar with yourselves if I didn't believe that, because again, it's our reputation. And I'm telling you to send business to a lender. That is brilliant. They really, really are. We've got a couple more questions that have came in. So Phil, I suppose we can both field this one, but it's a good question. I have an expat that's not lived in the UK for 20 years. They're now a resident in Spain. They have 2 buy-to-lets in Oldham that are mortgage-free, and they want to buy another buy-to-let. £20,000 deposit, purchase price of £90,000. Does tax returns with HMRC, but that's the only income. And that's obviously the rent, which is on 2 properties that she currently owns. Can this be done, or do I suggest remortgaging one of the buy-to-lets for her to buy the other property?
Just thinking off the top of my head,
I mean, the maths is wrong for the deposit.
I don't think we're quite there at 75%. Yeah, I think we're just over. So let's assume we can get down to 75%. Then yes, it's just a regular transaction for us. There will be a slight loading on the rates because of expat status, but that will fit as standard.
Yeah, no, exactly that. So whether it's done on the existing buy-to-let or the purchase, it doesn't really matter, does it?
No.
Perfect. But yeah, no, any cases like that, again, just refer them to us or speak to us on. Do you know what? Looking at time, I think we've been on here for almost an hour now. I do feel that's going to be long enough, but I think some more questions coming in. Yeah, no, that's absolutely fine. We can answer them, not live. So yeah, I think the main thing to remember and get out of this session, and again, Phil, you can close in a second, is Crystal, we do absolutely everything. We do bridging, commercial, development, specialist residential, buy-to-let, secured loans. If it's property related, we've got an asset to secure on, we can help. If it's an area that you're not involved in, which you want to get involved in, but ultimately you're scared, don't have time, or just not interested in, then please do just pick up the phone myself, drop me an email or my team, and we can help you, hold your hand, or even you can refer the case to us and earn. You do get paid a decent proc from ourselves, and we do get enhanced proc fees from the majority of lenders that we use. So as someone mentioned previously in the questions and comments, even referring business to us, which you know is going to go to a certain lender, a lot of the time you'll get paid the same, if not more. We take the legwork off you and you deal with your bread and butter stuff. Use us as a dumping ground for the cases that you're not comfortable with, you don't know what to do, or specialist isn't for you. Again, together we're a fantastic lender. We do have exclusives with them. Obviously, you can't go to them direct at the moment. You have to come through ourselves, but we've got that relationship, so you don't have to. And I think that's the key point to take away from this. As we mentioned previously and at the beginning, the high street's closing in terms of the types of clients they want to do. Certainly now more than ever, more of your clients won't fit the high street, which I would say unfortunately, but it's not unfortunate because there's still solutions there. You just have to dig a little bit deeper and go down them side streets to them boutique lenders. So yes, anything from you, Phil?
No, just thank you very much for joining. We hope you found it useful and informative. If I can leave you with anything after everything I've talked about, those three words: speed, flexibility, and certainty. That's what we're all about. Pick up the phone to Dan and his team at Crystal. We'll help your customer get over the line with their transaction and find that solution that they need.
Yeah.
So thanks again.
Brilliant. No, perfect. Thank you for that, Phil. And if anyone has any wider teams that want myself and Phil to come and do a joint training on, anything like that, please do reach out. We will be holding another session probably within the next 3 months, so keep an eye out for that for round 2. And we'll be looking at post-COVID solutions and where the market's going and where we see the market going for the rest of the year and the foreseeable future, focusing more on half 2 really. But yeah, that's it for both of us. So thank you very much, Phil, and thank you everybody for joining. After this, you will get an email with unstructured CPD certificate, my contact details, Phil's contact details. So if you do have any questions, pick up the phone to myself or Phil or drop us an email. But hopefully you found today useful, and thank you very much for joining. Have a great day, everyone. Thank you.
Thank you.